Hey there, folks. Welcome to the Market Internal Review for Tuesday, October 24th, 2023. Apologies for not having the typical Monday review session published. Have some personal matters that I've attended to and wasn't able to get one recorded, but we'll cover that here real briefly. So when we opened up yesterday, Monday, we had a $1.50 gap, and we basically spent most of the day trying to fight a very strong add and vold and retest previous TWAP from Friday, as well as that first standard deviation range that I've been bringing up here in the past couple of MER videos. And we had significant areas of Mercy showing potential overbought, and it was really decent actually at finding those tops. And this range in particular is kind of important, this 420, 423, 424 area, and we'll kind of go over why that is. But looking at the ad for Monday, you can see we started in that bear zone, and this is so important, is when we start in the strong bear zone or the strong bull zone and we lose that positive or minus 1500, I'm seeing that's a very good opportunity for at least a counter trend, per the internals anyways, a counter trend trade, in my experience. That's not a recommendation, obviously, but that's what I see. I did spend part of the day being short, given that I was expecting add to only briefly come up towards add zero and start to fall back down, mainly because of the bigger picture here. We've had some really strong dumping on the SPY daily chart. We, Friday on the 20th, had a closure below the 200 SMA. And, I think at the end of Friday's video, I said I didn't have a whole lot of expectations of where we go from here. But the more I got to thinking about it, the more I felt like the short side was probably going to be the ideal, but I was waiting for some kind of a pop. We did have that after we had dumped, though, overnight, and we did an incredible amount of work Monday. You can see this huge range we had, and the big thing for me that I really keyed in on was watching to see what we would do with the mid of Friday's candle. So that's why 424 to me is important. I'm always looking, if you've watched the videos, I'm always looking for 50% as a just a very simple measurement to use for various things. We also have this 425 and change, almost 426 level as well, and there's a lot here that I think could be retested. So while I spent most of the day being short, it was a fight and not really my best trading. But coming into today, since that's where I'm going to deliver the review for today, today was interesting. We had a good pop up, a $2 gap up, just a hair bit more. And the thing is, though, is that we had that gap up, and both Mercy and MIT indicators are showing just extreme bullishness that personally I just wasn't really believing, because of the 424 area and also the way the price acted for most of the day in that morning session. So we have this, almost an hour range here where the price basically stayed within that first 5-minute candle. So I'm on the 2-minute chart, but this is about a 5-minute. I think the 5-minute was somewhere right there. And you can see, for this first hour, we're basically stuck in this awful range. I'm seeing all of this high tick on the bull side. Of course, the morning's tick is the highest. There's always a little bit of a skew to start out the morning, but all of these high tick spots, save for here, and we kind of built this divergence where we're flat, maybe slightly up, but we're heavily advancing on the price of SPY. We know that we're looking at previous day high test. All of the other indices at that time in the morning were testing previous day's high prices. Qs had the monthly gap The Dow basically had a monthly TWAP level, had the previous day high. Russell, same exact situation as Dow. All the indices resting above their gaps had bounced the daily gap high. Meanwhile, we've got the entire New York Composite below first standard deviation on the month and also below previous day high. So just a massive test. It took a while for the indices to become aligned. It always amazes me how it looks like they were basically aligned for the whole day, but these wicks tell a big part of the story of just how diverged they were in the morning. Not very many high wicks on the morning candles here at the highs, but if you go and look at Q, you can see these insane wicks on all of these candles here. Every time I looked at Qs, I'm mainly trading SPY, I'm ready to maybe look for like a short scalp. I look over at Q and it's ripping, beyond the gap high and possibly looking to test previous day's high. So Q is just really infuriating me today, where it just really seemed to want to do everything that none of the other indices was doing. So anyways, we get to this previous day high test, and that's about the time where I alerted out on Twitter. I wanted everybody to have it on their radar what the ad was doing. So the ad was above 1500, which if you watched my how to detect a trending day on SPY, you'll know the significance of 1500 being held either on the bull side or the bear side is a really good indication on average for a trending day. The thing is that the price was not reflecting it. And I've mentioned in a handful of my old videos that if the price of the indice or whatever product it is you're looking at, a stock, if it's not aligned to the market internals, it's a great time to just walk away. Either walk away or maybe employ a different strategy that's counter to or suitable for that environment. But either way, so we hit this 5-minute tight range. I'm looking at ad, and I'm saying that there's a lot of hesitancy across all the indices, and we've got a huge test here across the board. By that point, all the indices finally were aligning themselves and moving in alignment. And previous day high test on New York Composite basically aligned with all the other indices, and we finally start to see some weakness. Now we get this break and retest kind of short entry. Actually, the first real one is right here at 1056. We get a close in first standard deviation high, we get a green candle, and then we get one more, albeit kind of a weak one, but we do get one more close in first standard deviation to the downside. That's it. For me, that's a short setup to take. That's early, right? So your risk is somewhere either at the current day's high or some other logical spot. Could be previous day high. I mean, that's real tight. You could get stopped out prematurely. There's also more entries at TWAP, and then also the other one is right here at first standard deviation low. So we have a strong knife down over first standard deviation low. We get it closed back above, but you see how it's staying within this first standard deviation range from Monday rather. That's good. That's what we want to see. Then we get another bear close breaking back below. That's a successful break and retest style entry for TWAP that I like to use. Now, it is suspect when we are sitting right above a daily gap. We're inside this previous TWAP range. It's hit or miss for me on whether or not I can decide if I like trading inside of this range. You can kind of treat it like opening range orb breakouts, where you can trade the range or you can trade the breaks above or below the range. And I just really haven't decided, but what I do know is that I like to find the trades that align best with what I'm seeing on MIT. So this hesitation here and here is mostly explained for me by the fact that the trend indicator for the New York Stock Exchange is basically non-existent. It's not strong bear, it's not strong bull. we're seeing all this bear tick finally starting to break 500 downside, average closures curling down, but we're just not really seeing it in price. So remember, we were already heavily diverged from add. We're not seeing a trending upside day. We're inside day so far on pretty much all of the indices. And then we get this breakdown. So this is kind of like, for me, it would be maybe a reduced risk kind of short. Unless you were already up here, you could take a little bit bigger size. But, grabbing this here after we've already hit basically low a day, we had that daily gap I just turned off, and we're inside this range, it is a little iffy for sure. The good confirmation to hold, being that TWAP would be your stop loss, it certainly should be, is that wick right there. The wick high was 423.56, and at that time, let's see, where's my session TWAP? Okay, so TWAP at that time was literally 1 cent higher than the high of this candle. That's amazing, 423.57. So a perfect confirmation that TWAP is holding, and we're potentially still safe to hold some downside focused trades. And then we finally get this beautiful trade. We break the second deviation low, break previous TWAP, and do a full range first standard deviation previous TWAP from Monday here. We do a full range test all the way, almost all the way down to the bottom. We get that strong closure back into second deviation. That's a pretty good signal to at least trim or something. Notice as well that is previous day's midpoint price. So just the previous day's range from Monday, that's the mid price. That's also real close, not all the way, but real close to the daily gap low point. So this is like a really good signal as far as I'm concerned, just from gap theory, that if we're halting price before we fill the gap, quote unquote fill the gap, that's a good indication that we're probably going to see a reversal, at least in my experience. Whether it's short-lived or not is up to a myriad of factors, but pretty excellent trade set up there. And then notice that we had a mercy squeeze right at where previous TWAP was being hit, but we got a continuation short. Lots of wicks, lots of hesitation, but we did finally get that. Lots of bear tick confirming that bear price. But this being the low is no surprise to me, given that the price of the New York Stock Exchange and the volume are both still green. So that to me is like the market saying, hey, we're cooling off a little bit here, but we're still focused on the upside. So we have a couple of different trade opportunities here. We see just a blip of trend balance could mean potential for a mean reversion setup. And we finally do get a nice break. We get a retest entry right here. You could have also maybe entered here, depending on how you like to trade. This right here is awesome because we've got a low and a higher low on tick. It's not much, but that coincides with the price. So it's a good alignment and good signal for potential continuation for that mean reversion, which now trend is showing complete balance with the yellow dots. We've got the trends for advancement and trends for upwards focused volume on the New York market, all pointing bull side. So if you take this or this here, you've got a full mean reversion, high probable trade. And I mean, you could have caught both sides today quite effectively. I kind of like this. This is the true entry here, but you grab almost $2 that way. So if you got the earliest entry over here and you manage to hold this through the whole range, even if you got just the 50% of this range previous TWAP from Monday, that's $2.22. If you happen to get the break here, previous day midpoint price, that's $3. So best case scenario, that I would say. And then if you got the more confirmed entry, but a little more skewed on the RR, you've got not quite $2 move on the downside. Or if you're just more interested in a little scalp, you got a $1 move there. Seeing that price did come up about 60 cents against your SL, usually I try to hold it longer than that to kind of double that. But sometimes you got to take what you can get. So overall, pretty crazy day, you know, an inside day, and just still a lot of attentions. We've got tech earnings. We had Microsoft and Google after hours, Visa and Snapchat, and then JPal is coming out after hours tomorrow. Let's see. I'm pretty sure it's after hours tomorrow. Yes, after hours tomorrow. So supposedly this is not any kind of big economic speech, and that kind of thing apparently is on pause. A friend of mine was showing that they can only have so many hard impact economical meetings and speeches in a given time, and then they have to do like a media blackout. So there's not supposed to be any big impactful statements coming from JPal. Whether or not the market believes that is another thing. So tomorrow could be garbage. We could see a lot of volatility based off of the earnings and profit taking, you name it. So I'm going to be incredibly cautious going into tomorrow, but we did see a lot of heavy tick towards the upside, and we did a complete V effectively, but we did not break out of previous range. So same thing for most of the other indices. I did not look at Dow. Yeah, so Dow, same thing, did regain monthly TWAP level. Russ did not. Russ is still deep into second deviation on the month. Don't know why that just showed in Qs. Okay, yes, so second deviation low. We actually broke below it once today as it was testing the midpoint of its daily gap. And the Dow is in a similar position. SPY and the Qs, first deviation low area on monthly TWAP. So is the Dow. So it's a little bit of a mixed bag. This could still just be a pop before we start seeing more selling. The thing that's keeping me somewhat hopeful is that we did kind of close back above this 200 SMA on SPY's daily chart. We are seeing some good volume here. We had just shy of 80 million volume today. That's not too bad, but I really want to see. I'm going to pull out my lovely 50%. I want to see that 424 level break on SPY before I'll consider that we're going to maybe see a little bit more upside. If we don't see that, I'm not very hopeful, but I am starting to see a lot of the sector RSIs curl up. That's not an exact science. I'm also seeing growth of the S&P 500 above 20-day. It did bounce. It bounced right here off of Monday's action. So that's a little bit hopeful as well. And I'm still sticking to kind of my thesis from a while back now that I kind of expect this area to be a choppy, nightmarish mess. But that doesn't mean there couldn't be opportunities. So I would much rather see us reclaim this monthly trend line, which I still need to kind of zoom out and take a look at whether or not it's still anchored correctly. But I would love to see price get back over that for upside. If not, then for downside, I really want to see 416 break. If that breaks, or this intermediate low that we just made of just like 418, if we can see that break, then I think we're going to see a lot more downside. But that's not really exact science either. So other than that, just to head off the day here and finish the review, you can see the volume was definitely running quite high. I think some of this was Microsoft earnings. They started literally right after the market closed, as well as Google. Google went down quite hard on a beat. Microsoft was doing quite well as well. I didn't check the rest of their after hours price action. Things always can change with the conference calls and whatnot, but I think Snap did well, and I think Visa did well also. So the fact, though, that the indexes didn't really run with the volume has me a little concerned. We did see good accumulation yesterday and today on tick. So I don't know. I think it's still kind of a mixed bag. It was nice to see us drag the 200 SMA on add up, but that accumulation is definitely more balanced. And the fact that we did not hold that 1500 kind of gives me a little bit of hesitation to say we're really out of the danger zone. And with VIX losing, we were up to 23, which was pretty crazy. We have fallen all the way back to 19. So if tomorrow ends up being crazy, then what I would expect to see is we're holding this kind of pivot area here between 18.5 and 19 on VIX. We're going to start running that back up, and we're going to start seeing a lot more heavy selling. And I think the narrative from a monthly TWAP standpoint is still there as well. We've basically spent time testing this September-October monthly gap on tech, and we're about ready to potentially sell off. And this 420 price is a monthly low for SPY on October, and we did break that. So we've made a new low already at 417 and change. So the fact that we had enough power to do that, I don't know. It's so tough right now with everything that's going on. So I'm going to finish it up here. I hope you found something useful from this video. I've been hearing lots of feedback from all different people saying that they really appreciate the tools and they appreciate these videos. So that's really encouraging, and that really does make me happy to hear that. That is really all I aim to do is to just try to provide even one little nugget that maybe changes the game for somebody. So that's really encouraging, really motivating. Anything like that you want to send, feel free to do so. And as always, happy trading, and thanks for watching.